The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
All right, big news of the morning. The wonder kid of the banking industry, Macquarie Group, another miss today. An upgrade on an update from Macquarie told investors it remains cautious on its outlook after reporting a drop in first quarter profit in its markets-facing business. Chairman Glenn Stevens mentioned quieter conditions to justify lower earnings for the commodity sector in general. While Macquarie did not disclose profit figures in the quarterly update, it said its first quarter operating group contribution was broadly in line with last year. Macquarie adds that it remains well positioned to deliver superior performance in the medium term. Market going, Glenn, have you sold us a bit of a bogey there? Down 8% on that update this morning. Howard, what did you think of the update and Macquarie at these levels? Still above 200.
Yeah, I don't think the update's that surprising. Macquarie is going to do exceptionally well when things are heading in the right direction for it. There's a lot of M&A activity is great for them. A lot of commodity activity is great for them. And that's, of course, slowed down quite a lot in all those fields. So I don't think it's that much of a surprise. And also, of course, their PEs at the moment, yesterday, ended the day at 24. Now, if you look through their PE historically over 10 years, that's the first year in which their PE has reached 24. The highest up until about 18 months ago was 1 year it got to 16.8. So the market's probably been getting a little bit too excited about Macquarie Group. And if we have a few down days in a row, like we seem to be having, that'll probably get it back in line with roughly where it should be. But it is a business run by some very, very bright people. In the long term, they'll probably do well. But certainly at these sort of prices, even before that update, it looked very pricey. It now looks even more pricey.
Right. Okay. So you wouldn't be putting new money into Macquarie at these levels?
Yeah, I've never held it, and I don't think many Team Invest members hold it, because one of our biggest philosophies is you want to be sure or virtually certain about earnings per share 5 years ahead. Because of the kind of business Macquarie's in, how could you possibly be sure or virtually certain of earnings 5 years ahead? It's too dependent on outside circumstances. So, on that basis, it wouldn't make one of our top 20, but it certainly passes all our filters in terms of, reasonable return on equity. Debt's not really an issue with banks to the same extent, and earnings per share most years growing, but too unpredictable for us to put our money into.
Yeah. So are you in any of the big four banks?
No.
Right.
Not personally.
Right.
No, my apologies. My super fund has some Commonwealth Bank.
Right.
So indirectly through my super fund, yes, which I manage myself. So, I can only blame myself for that.
You're doing all right with Commonwealth Bank, though.
Yeah, I have.
It's been a sell for about 6 months by every analyst. Take profits ridiculous levels, like Macquarie at the moment, but someone keeps buying it.
Yeah, and I haven't eaten my own cooking, because I've been one of those who's also said it's ridiculous at these prices, but I haven't figured out what else to do with the money, so I haven't sold it. No, the other banks I don't think are held much by Team Invest members. There's always the odd member who feels a bit of comfort in owning some bank shares, but generally we never talk about them in our investment meetings.
Okay. Grady, what do you think of the Macquarie update, and has it changed your view on them?
No, not really. It's a bit unsurprising. We've had low foreign exchange activity. We've had interest rate trading remain strong. We've had the commodities and resources, agricultural sectors remain strong for Macquarie. So the result was unsurprising. Where the areas where they dipped, we were expecting. The areas they were strong in, we're expecting. So again, it's probably today the share price depreciation is probably people taking profits more than anything, because as Howard said, 24 PE is very, very high and very overvalued for a banking sector. You'd expect that more in a tech stock or something like that. So Macquarie is actually my pick of the bunch among all the financial houses. I'm not a traditional big bank holder. I don't hold Macquarie, but if I was to hold a financial stock, it would be Macquarie because of their diversification, their strong management team, their growth in the sector, market share. Everyone talks about Macquarie, so Macquarie is the one to hold. I put a hold rating on it just because we are expecting a bit of downturn in the whole financial sector when interest rates start cutting. So it's like the update was not unsurprising. It was to be expected, and again, the share price depreciation, profit taking today.
Okay, would you trim if you'd
I would trim a bit. Yeah, I would do what the market's doing today. Right. Yeah, personally, I would. If I had bought in at a reasonable price, I'd trim my profits and let the rest run.
And same with CommBank?
CommBank as well, yeah, absolutely. I don't know how you can justify the valuation that it is.
So who keeps buying?
I have no idea. I question this every day.
Is it index funds or is there just so much money in index funds through super or,
I think it must be
passive?
I don't think it's
ETFs
retail. I don't
whatever.
think it's retail going, this is where the opportunity is, because that's obviously, according to all analysts, it's not where the opportunity is. So it must be, like Howard said, tied to super funds and tied to, because it is the staple bank. It's the biggest bank in Australia. It's the safest bank in Australia. So,
and if you're in an index fund, an index fund has to invest.
It has to in the biggest, in the blue chips or the big banks or whichever ETF you're in as well. So I think
it's index 30% banks or something as well. So
and mining is
their mandate has to do it. Howard, does it?
Yeah, and the index funds today, it's estimated, form probably about 70% of the entire market.
Wow.
And, when you consider the way an index works, particularly in a country like Australia where our index is so concentrated, index funds are really dumb money. It used to be said that you could follow the market because the market was smart money. That really doesn't apply anymore now that so much of the market is driven on index trading strategies. And especially after Grady also mentioned about Commonwealth Bank, I sort of cringe that it's in my super fund. And yes, I too would, I'm sure, be more comfortable with Macquarie than Commonwealth Bank. But I bought the Commonwealth Bank in my super probably 20 years ago.
Right.
It's done very well and it still sits there, but I should have probably got rid of it.
Yeah, okay. All right, let's, Macquarie Bank or Macquarie Group was our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.